U.S. futures pointing to a higher open on Tuesday, with European shares up 0.2% as investors remain optimistic that the European Central Bank would take necessary steps to prevent the collapse of the euro. Treasuries declined for the second day before U.S. debt auctions, while gold is on the rise. Earnings out today from Walt Disney and Express Scripts. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. Stocks are continuing to extend last week's rally. A lot is working in this environment, although some investors seem to be fading this rally instead of trading it. So what do you think is really working in this environment, Scott?
Well, right now working is trying to be long, trying to have a few different plans depending on who you are as an investor. A lot of people out there, you see Bill Gross going, ranting the past week or so. You see Rubini out there with his typewriter trying to get invited to new parties. All negative, all saying the equity markets are dead. But if you had a macro long-term plan in equities, I think you're going to do fine. And we've said in the next 3 years, I'm thinking more S&P 1700 versus S&P 1000, which is the bearish case. But let's pull it back to the intermediate trends, more of the here and now. And if you look at the chart of the S&P, I think there's a lot to like. First of all, you take a look at the low that was put in last October. From there, you had a nice move straight up. We wedged right here coming into the new year. December, we talked about breaking above this level, about 1265, and you had a really nice first quarter. Nice first quarter, a lot of leadership, a lot of things going on. And then remember that crazy correction that everyone said the world was falling apart? Well, what did we do? We came in and went as low as 1266. So what happened right there? You had a retest of the breakout from the beginning of the year. So if you didn't catch this move, you didn't have to chase it, you could have bought the dip. And then if you go to another tool that I use, the Fibonacci retracements, you go from this October low all the way up to that peak, and you want to measure the retracement to see if there's any commitment. You see right here, we held above the 50% retracement, showing that dip buyers came in, and you could have came in also. And ever since that June low, we've had a series of higher lows. We've been methodically moving up, climbing what I call the wall of doom, because everyone out there is so damn doomsday-ish. And at this particular point, yesterday we came a little bit off the highs. Everyone started ranting all over again. But, if you look here at this channel that we've been following, every time we have hit those highs, you see a little bit of a pullback. And right now we're above the 8-day, we're above the 21-day. But overall, we're only 2% off the highs of the year, and everyone hates the stock market.
Well, as we approach the top of the channel there, would it be a good idea to put on or add to a spider hedge?
Well, yesterday, I don't know exactly what time it was around 1, 2 o'clock when the market started to extend. So I tweeted, I said, you know what, if you're holding multiple positions, now you could put on a spider short. Or if you have a spider short, maybe this is a time to add so you can maneuver and actively manage your positions. And I think the spiders went as high as like 140.20. Then at the end of the day, pulled in 50 cents. So the way you manage that is then you cover some spiders, and then hopefully in that pull-in, the stocks you're holding acted best, and you add some of those back. So now today the futures are opening up. If you bought some of the stocks you've been holding, you sell some of the stock, and then the spiders you covered on that pullback into the close, you could put some more out there as we extend. And that's how you hold positions and you have a hedge and you just trade around it and keep trading around it. Because also guys that are trying to micro scalp through levels, they're having some success, but it's really those that have a little bit of a vision, that are trying to expand their time horizons, like i.e. in Apple, instead of just trying to trade it through price points like we saw yesterday at $619.70. It was more like trying to hold it, massage the position, have some, add some, trade around it, and you can do that with a lot of stocks as we move forward, in August and hopefully in the fall.
Exactly. A lot is working out there. We're seeing participation in the rally from not just leaders, but laggards. So as you mentioned, Apple, let's start with that one. High beta techs are acting as the leaders in this rally, and Apple broke the key resistance of 620 that was in place yesterday, went as high as 624. So where's resistance and support now?
Well, I'm going to use an example and show a little bit of a play-by-play of how you could have held some and traded some for cash flow, and I'll give a few for instances the way I did it, just so you can see it can be done depending on your time frame. If you're a macro investor and you're still holding Apple, stay the course. I see 700 plus. if you're a scalper, you can make money. If you're an intermediate trend trader, you can make money. You remember what happened? They came out with earnings. They missed. They got it down. You had a gap down. It lasted 2 days. So if you take a look at the chart here, you will see that here is the gap down from earnings. In this little range, I'll admit, I tried to short it once or twice when it tried to break below 570 and break the support, thinking that maybe we could have more downside action, but it didn't. So once it triggered on that Friday above this range into the gap, some swing traders got long. A lot of guys in my office, whatnot, 580, 80 was your price. And from there, you had a beeline move all the way to the high end of this range, right into resistance. So at this point, I actually faded Apple here and I made a little bit of money, but then I wanted to get on the real side of Apple because I needed to readjust. So what I did is on this day when it showed relative strength, if you remember that on Thursday, we tweeted about it saying if we could hold this gap anywhere between 600, 603, it's a place to buy. So this was buy number 1. Okay, and then when it triggered above that 12-ish, it was buy number 2. And then yesterday, as it triggered above 617.98, or you could use this as your pivot, 619.87, it was buy number 3. And then as it went up into just a new area highs, not obviously the highs of the year, you take some off, which I also did to get back down to a level that I felt comfortable. So, but you have 3 buys along the way, a sell right here, and now you just trade around it. If you're long from here, you did even better. You caught that 3-day, power packed move. But anyway, it closed right now. Today, watch yesterday's high as a pivot. Stock's up like $2. So at this point, if it takes out yesterday's high of 624.87, perhaps you get another push. Another point of reference right now is 631.33. And then you have the highs here. But overall, if you don't want to be cute and trade around it all day long, just stay long this thing and let's see how it acts when it retests the 640 area, which I don't think will contain this. It's just a matter of when.
Also acting well in high beta tech, Google. Exciting action out of this stock yesterday. Rallied more than 10 points during the first trading hour before it did pair some gains. But how compelling do you think this stock is right now?
In the beginning of the year, this was my high beta tech stock of the year. Everyone was so upset. Oh, it didn't go yet. They had bad news, bad earnings, blah, blah, blah. P.S. It never fell apart. And the reason why I liked Google in the beginning of the year is I was looking at the weekly and monthly charts that were lined up. Google hasn't made a high since 2007. 2007, all they had was search. Now they have like 5 other business, 5 other cash cows, and their fundamentals are so damn cheap. And now, technically, it's been acting better since last earnings. So if those of you who got stopped out, earlier in the year or didn't like the action, said, okay, I'm out of it, I'm going to wait. You didn't have to go through the noise of the stock. We put a price point to get back involved around 620. Let me show you why. You go to the chart here at Google. This was, your gap up after earnings. The stock held big support, even in the midst of 2 bad quarters. This was, bad quarter number 1, held around the 200-day, held above this support level, came back up. This was report number 2, not great, came back in, but what did it do? It held this 550 again. And then in this report, this time was different. It actually gapped up. A lot of people are saying they like the pay-per-click, rates increasing also. But anyway, it gapped up, held 600. So tier 1 could have been right in here as it held above the earnings gap. Tier 2 when it crossed 620, and then you had a little momentum through this downtrend, and then there was some news that Apple's not going to have YouTube as software in their phone, so it traded off. But all in all, I think this stock's acting very, very well. And if you take a look back at the monthly chart, which is the reason why I loved it in the beginning of the year, and you go like this, and you look at it, this was the high in 2007. It's now making a series of higher lows. You have a low, higher low, higher low, higher low. I think it's a matter of time, maybe one more really good earnings report in the fall where it's going to bust above this 670 and a quarter, and we're going to be seeing those highs. And I do think it happens within the next, I would say, it could be sooner, but I'll be conservative and say 9 months.
All right, well, not all tech names impressed yesterday. Amazon missed out on the rally. So what will it take to get this stock going?
I think this stock is just, it still has a high multiple and people still don't really trust it, but overall, it's acting healthy. It powered through the resistance we talked about, and since then it's been holding above it. If you take a look at Amazon, you will see, this was the level that traders were watching on earnings, is 230. It powered above it, and ever since it's been a little lethargic, but it is holding above it. Today, there's some news that they're getting into social gaming. You have the high here of 236.49. My guys will probably use this as a pivot. If it can get above this 236.49 and hold above it, I think it retests this 240.74 today. So make sure it gets above this level and stays above this level. And then if you take another step back, you will see we're closing on historic highs, 246.71. Go to your monthly chart. People say investing is dead. If you are long Amazon, I don't think you think investing is dead. If you're long Apple, same way. I don't think you think investing or stock picking is dead. Anyway, let's go to the next one.
Baidu was also really hot yesterday, rallying off its 100-day and reclaiming its 200-day. So where's next resistance for Baidu?
Baidu is hot. Look at that. Baidu was hot yesterday. It pushed through another level. It became a little bit of a laggard in the past month. But what happens after earnings, if you have a great report and you act well, they become something in fashion, right? in vogue again, and gets hot. And yesterday, Baidu definitely, flexed some muscles with some other Chinese names. And if you look here, we've been talking about Baidu for, 2-3 weeks again. We didn't talk about it for a while, ever since it started this downtrend. Then it gapped up on earnings, right? We talk about stocks that don't fill their gap, usually trade in the same direction of the gap. Then, it also broke this downtrend right here. Okay, this lower level pivot. And then, if you missed that, there was also a level we talked about off the charts, this 124, where finally, it powered above it. And it also took with it some stocks that you could probably take a closer look. First igniting bar in Sina looks okay. Maybe that continues up to about 55. Yoku, also ignited yesterday, lower level trades. So some of these lower level trades are waking up and have room for some cute cash flow besides the leaders out there.
And LinkedIn also looking good. This one's an interesting one because it really seems to be proving a lot of those naysayers wrong, ones who say it's just another Facebook. How much do you like this stock right now?
I've tried to hold people in it, and myself, it's been hard because every time Facebook gets smashed, people are like, oh, LinkedIn can't go higher, and the shorts just get in there. And now this is the third quarter in a row that they came out and they impressed investors. Institutions, I think, have been accumulating this. Shorts still are trying to pound on it, and then finally it reported this quarter, gapped up, closed near the highs. And yesterday was a great tactical play also to show you can make cash flow. Stock closed near the highs. It was down like $1 and change, and then not only did it go from down $1 and change, it went positive, went through Friday's high, and closed well. You look at the chart here, and this was earnings right here. Okay, gap up, closed near the highs, open lower. It could have been an aggressive buy there, or when it went above 108.60, and then it went as high as 113, and then closed on 111. I think at some point you look at this chart, the biggest winners come from new issues in the past 3 to 5 years, and this is proving itself that it could be in that game. Holding higher, it held above 90, it's above the 200-day, coming near old highs. Next real objective of resistance is around 114. I hope it waits and sets up again, but overall, I think that this stock, has a big future ahead of it, and is proving that it's not Facebook and it could monetize its business. And maybe Facebook does it at some point, but they still have a lot to prove.
All right, well, coming up, we're going to go in the trenches with refiners that continue to act well off their lows. But first, a quick commercial break. Stay with us.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
We're back and going into the trenches with refiners that continue to act well off their lows. Let's start with the OIH, which has had a nice bounce since late June. It's broken all key moving averages, so is it setting up for higher prices in the near term?
Well, this is why the rally is staying intact, because you have groups that lagged in the second quarter that have been acting better. And in the third quarter, you had a big reversal, and then you had a gap up. Oil started acting better ever since it pushed below 80 and then just ignited back to the 90 area. And if you look at the OIHs, if you weren't involved, look at this gap up right here. Okay, right here was your reversal. If you missed this, okay. then what'd you have? You had a nice gap up on, what was it, 629, pushed up, came back in, never filled this gap. This was your spot to get into tier 1 as you saw a lot of people trapped and some power-packed bulls not letting it come in. So it's tier 1, and then when it recrossed above this pivot, that was your add. It retested, and now it's continuing to the upside. So all in all, this laggard group that's not leading, it just took back its 200-day, which still, I'd say this has room to 44 to 46. But tactically, you can get involved with these type of groups using lower level tactical plays. And at this particular point, it seems like it's just floating to the upside with some other groups as well.
Let's take a look at a stock like Schlumberger, which traded in a tight range yesterday. How does this chart look to you?
This one also looks very similar to the OHs, but it's giving a little bit more alpha, a little bit of a higher return. So if you look here at Schlumberger, I think there is still some room left. Here was your reversal, very similar, across this pivot point right here. At this point, it's holding sideways. I think my guy's going to be watching it right here. You could get another trade. This stock trades above 73.47, and your next move, takes you north of 75. If you take a macro look here, it hasn't been acting very well this year. It's gotten battered and bruised, but it's acting a bit better. So I would say between 75 to 80 would be an area that's very realistic for this stock going, moving forward into the fourth quarter.
And Baker Hughes consolidating above its 200-day as well as other key moving averages. Where might we get a break here?
Well, this one hasn't been as strong, but it's started to act a little bit better. If you look here, as far as the chart's concerned, you see also you had a really nice gap. Okay, we talk again about strategic ways to get involved. Here is your gap. Did it come in and fill the gap? No. So what does that mean? Shorts are trapped, and guys are stepping in front and buying it and not even waiting. So at this point, you have another pivot right here. I'd say above 48, traders will be looking for it. And this has clear sailing up until about 52 before it gets some massive resistance. And actually, you see a little gap right here. This gap comes into play about 51.84. So I would say that reasonably, this could easily hit that level, and you do have another price action area right in front of it.
And Halliburton holding on to gains from Friday. At what level would you buy in a pullback?
Well, this looks pretty much the same. It's not pulling back. It's coming off the lows. Take a quick look at the chart. You have a nice flag type pattern right in front of the 200-day, which sometimes could be very explosive because a lot of people are short in front of it. So if this stock starts to get through 34.14, I think you could add to positions, and next real level doesn't come up until about 36 to 38 once it closes and takes back that 200-day. So overall, we're now above all these moving averages, holding higher. So again, very systematic, nice, spirited move off the lows. Here was an area that could have been like the perfect entry, but not everybody's perfect. I'm not in a lot of these names either. I've been trading other things, but they look good. Some guys are having success trading these, and this laggard group looks like it has some room left.
Yeah, lastly, Exxon has had some trouble breaking through that $88 level, but if and when it does, we could probably see some real action. So what's your game plan with Exxon?
This one's a lot different. This is a leader. Once the market, I feel like, gets the green light, which it's almost ready to do, you'll see stocks like this break out. This has been, it's above the moving averages. It's not a lower level trade. It's just a matter of whether it could make, new highs. And if you look at the chart here, I know Taylor has been trying to trade it for a nice breakout. I'll give you a shout out because she's been sitting in this thing. Look at this level here. This is a big, big level. I will be watching this today. We start to see some movement to the upside today, perhaps above 88. And you will see higher prices. You take more of a macro look, and this chart looks unbelievable. Coming back to these old highs, couldn't get through it here. One of these times it's going to knock on the door and bust through. This is a little bit like an inverted head and shoulders, but even though that happens at the lower level. So either way, 88s that don't pass on. If you're short, you better be covering here if we get to close above 88.
All right, let's do some quick hits. With poor crop conditions for corn and soybeans right now, a lot of eyes are on fertilizer stocks like Mosaic. So what are the key levels to know for this stock right now?
I'm not even going to put up the chart. We're behind above 59. You could buy a little bit more.
All right, casino stocks perking up yesterday. LVS and Wynn both ending the day with decent gains. What do you think of Wynn?
Well, LVS absorbed that news of, them taking big deposits and doing money laundering. PS, we said it capitulated. The low is in. You look at the chart right here, LVS. That was on this day. Ever since then, nice move. It's coming into resistance. I'm not sure if it's going to be able to break and close above this 40 the first time, but overall it breaks and closes above this. I think we could see 45 to 46. Yesterday in my morning note, I talked about Wynn getting over 96, and it did. You look here, lower level trade. Just a lot of price points right there, traded above it. this too, has a lot of resistance. But if the casinos want to go a little bit, it does have more upside. And I think that real resistance doesn't come into play until 105. It's just starting to go. This is a very weak group. But, if you want to dissect it, if you got long for a swing trade below 36, you saw 40 yesterday in LVS in a week. So it shows you can be tactical if you're not caught and you don't, and you follow your sell rules.
All right, Starbucks was hit hard after bad earnings, but has not taken out the low yet. So where's the opportunity here for active traders?
I've been in this for 2 days, and I don't like the way it acts. I sold it yesterday. I'm going to wait to see. If you look at the chart here, it's been coming down. This was, your faulty top, came into support, bounced, couldn't get going, came back, tested again, bounced, couldn't get above this double top, broke below. Here's your gap. Never even tried to fill it. This was your break below this 46.12. And down here, I thought it was worth a try, but I'm not seeing much going on. This looks a little bit more like a bear flag that if you are trying for a bounce, if it trades below 43.04, you're going to have to get out of the way. So at this point, 43.04 is your out. If it trades below it, comes back above it like an 80-20 trade, maybe I'll revisit, but for right now, I have no position. I tried it for 3 days, and there's still a lot of people leaning on this.
And Yelp up big yesterday, almost 9%. How much more room does it have to go on the upside?
I don't know. At this point, it's a new issue. It's acting much better than some of the other new issues out there. You take a look at the chart. Big day yesterday. It's up 1, 2, 3 days in a row. It is coming into resistance. I wouldn't chase it up here. This 28 will be a big level. Maybe it goes sideways and then tries to break above this 27.75 to 28. This is the highest from the IPO. But at this point, institutions are getting a little comfortable. Their earnings were good. I'm not involved, but some of my guys are trading it. Yesterday was a nice little Q trade above this 24. I'd say if it stays above 24 for a while and consolidates again, maybe there's another trade through 28.
Then there's Yahoo, who's been hovering around 16 for a while now. At what levels could we see some buying power really fire up?
Last week I tried to buy it. For some reason, the stock just keeps staring at me. I'm like, what do you want, Yahoo? I'm like, get away. But anyway, I've been watching it, and you see a pattern here that's been tight now for almost, I think, 9 months. I got to look at it to make sure. But that shows you someone's accumulating here. They have the new CEO. You're seeing some advertising rates increase. You're seeing a lot of people watching like the Olympics on the internet versus the delay from the networks. And if you look at the chart here, you will see, you have a nice long channel where we're coming to the upper end. If you were short Yahoo, I would think you'd be a little worried if it starts breaking above 1620. I tried it last week. I got stopped out at 1570 right on this day. So it doesn't mean I won't try it again. I'm not sure, if it's going to be a deal or a takeover or just better fundies or people just, running out of supply to sell. But overall, this is the level here above 1615 to 1620. I think you could start buying it, and this could see 18 at some point this year.
Okay, so Scott, what's your focus heading into trading today?
Now, I have 5 longs, 1 short, where spiders are back above 140. If we make new highs in the spiders above, just say yesterday's high, what I'll probably do is I'll add to some of my spiders short. And if that's happening, most of my longs are probably moving higher. I'll sell some of those. And then, I'll just keep trading around back and forth. I'll see if anything else comes up or pops up on the radar that's acting well. So I'm going to try and hold some positions and then tactically play a few that pop up on the radar, and always have a little bit of a hedge on it. Every time we push to new highs or extend in the indices, I'll add to my spiders and then be able to cover some and fund the positions that I'm holding until that changes. I know everyone was saying that volume was so thin yesterday. Welcome to August. It probably gets even more thin today. So pick and choose your spots wisely. Don't overtrade. Have your iPad out. Watch some TV with one corner on, a video and one, eye on the markets. Because if you overtrade, you're not going to make money. If you pick your spots very carefully, I think you'll do fine, and you'll put a month together. So then when things pick up and traders come back from vacation and maybe we get some more volatility, you'll be ready for that versus battered and bruised by staring at a keyboard when volume was so damn thin.
And with that said, happy trading, everyone, and have a great day.